We're live. I think we are. Let me just double check the audio. You guys are normally pretty sharp about telling me if you can't hear me. Yeah, we're good. All right. Minimize that, close that, adjust that, do this, do that. Where are we? We are. Nasdaq is 10 green hourly candles in a row. Pretty strong. Chugging up higher. Volatility's crushed a little bit. Just that grind higher, little gaps. Little breakouts, little backfills, that type of thing. Crude oil still got a bid from the news yesterday. Small bid on Bitcoin. It's a bit muted, isn't it? Nasdaq's probably the outperformer of the bunch. If you're a stock trader, dollar's doing all right, or yen, should I say, is it's mixed, isn't it? The metals really rolling yesterday, kind of backed off a little bit. Anyway, we shall see. We've got NFP the end of the week. Who knows what's going on with Trump's put some he's put some deadlines on stuff. He might have a call with G, he might not. Headline risk is still there. Hard stops got to be, I think it's just a given. But anyway, today, enough of all that. Enough of all that. Welcome to the webinar, ladies and gentlemen. We shall get started pretty much right away. I will just make sure I have everything set up for what I need to. I'm adjusting bits here. Got some notes on the side here. I don't need the market ticking away in my peripheral vision, do I? Before we get started, every now and then I got to go through books. You see, I've got a few books here. I've got another bookcase over there. I've got a bookcase in the house full of trading books. And this is a good book. I don't know if it's still available on Amazon. It's called The Playbook by Mike Bellafiore. And by the way, my thumb is not dirty. I was clearing a printer jam. I've got printer ink all over my hand. I promise you I'm not a grubby-handed person. Just bloody printer ink everywhere. Anyway, this is what he says. This is interesting. So yeah, Mike Bellafiore runs S&P Capital prop firm, a traditional prop firm in New York City, and he wrote this book quite a while ago, actually. Let me just put it into context where we were with this. So 2013, this came out. So we're getting on a bit now, but there's some interesting things here. I highlighted this section, and I'll read it to you. I often put these highlights in the books, except for that book, which is my golden book from Toby Crable. No one becomes great at anything unless they engage in purposeful practice for many years at their craft. For example, many people incorrectly think that the Beatles were an instant sensation when they arrived in the States, guy's American, when in fact they had nearly 10,000 hours of hard work behind them playing in clubs throughout Liverpool and Hamburg. Super relevant for traders. Obviously, we sometimes take this for granted, right? But it is practice, it is repetitions, it is, that's what makes you a great trader, is just getting repetitions. And it's not always the repetitions in the market. It's not clicking the button. And so, today specifically, and the rest of the month, I really sat down and I thought to myself, listen, I interact with you guys. You asked me some great questions. You guys replied to the daily email. I talked to some of you. Some of you are members of Traders Mastermind, all this type of stuff. And many traders are doing exceptionally well. I'm like, keep going. But there's so many traders who it feels like they have all the knowledge, they have a decent amount of experience. They know the setups, they know technical analysis, they understand about psychology. Maybe this not perfect, but it doesn't have to be. But it's just kind of not clicking. And so I really sat down when I was coming out through the topics for this month, the webinars. And I thought, what is it that's really going to help the most? What is it that's missing? What are the big challenges? And so this first one of the month is I'm calling the missing edge, which is I want to go through the other extracurricular stuff that needs to be done to become a great trader. So the technicals, price action, how to read a chart, all this type of stuff. And what I often try and do with these webinars is look at things through a different lens and present different ways to move forward. It's all very well. I'm not saying we won't do stuff like this in the future. All very well saying, hey, here's a strategy. How do we kind of identify momentum ignition? We've done this type of stuff before, but sometimes it's taking a step back and saying, hey, can I get a decent ROI from spending 15 minutes a day doing something? Can I get a repeatable process? And really, something I see that's missing from a lot of traders who are kind of just about to turn that corner and just getting to the level they want is they don't have something they do regularly. Now, for many of you, that's because you have other commitments. Sorry, family, business, work, etc. And so you kind of try and cram trading into the time you have. That's fine. But we want to get to a point where, hey, you run this process through, whether it's a pre-market process, whether it's a review process, a replay process, whatever it is, so that you can improve and you can see the incremental improvement. So this month, we're talking about the day traders process, right? And today, we're talking about the missing edge. Next week, we're talking about building a playbook that fits you. So a lot of times I see traders just doing something that doesn't fit their personality, and it's very difficult to make fit. So that's going to be next week. Traders reset system after that, and then after that, the final one of the month, mastering the inner game. So we've got a good selection for you this month, ladies and gentlemen. Okay, so the missing edge. Great quote from Bruce Lee here. Use whatever works and take it from wherever you can find it. Very, very true for trading. You don't need to know everything. You don't need to be a master at anything. Or don't need to be a master at everything. You just need to be the master at one thing. There's enough opportunity in one thing. In fact, an hour ago, maybe a little bit more, I was talking to a trader who were looking through some of his data, and we're going, and we were kind of, he'd analyzed all this stuff. And last conversation I had with him, I said, dig into this, dig into your third ad, and let's see some of the numbers behind that. And the point is that he is very, very good at identifying aggressive trend days and adding and adding and adding. And now his data has revealed other avenues to go down to make use of the skill set he's got. So why do I mention that? Because as Bruce Lee says, do whatever works. If you find something that works, push the throttle down and do more of it. Maybe you haven't quite found that yet, but there will be a kernel of something that is working well for you. So today, we're going to run through different things, specifically going to spend quite a bit of time going through the review process, how to do efficient market replays, that type of stuff, things that other people aren't generally doing. And we know, guys, that generally, if we do stuff that others aren't doing, we're going to get results that majority don't, which is what we want. Okay. Now, I'll introduce myself in a moment, and I won't spend ages on it. I want to get to the meat of it. First of all, I have to say this. Obviously, thank you to Pepperstone for making this happen. And I have to just say, listen, if you please understand the risks you're taking when you're trading, spread bet, CFDs, whatever instrument you're trading. If you're trading with leverage and margin, things can get nasty very, very quickly. We're trying to come up with ways to manage the risk. We use stop losses, we use small position size and stuff, which can mitigate, but we can't eliminate the risk completely. But obviously, when things work in our favor, leverage works very, very nice. But we don't want to be rose tinted and just look at the good side. We need to be seriously good risk managers as well. So just understand that. I know many of you do already, but I have to say it, and I want to say it because I hate to hear there's a sprinkling of new traders may watch this, maybe here now, and maybe you don't quite understand. My advice for you is if you're brand spanking new, just get on a demo. Get on a demo and see what different sizes does to your account balance. And even if you're relatively experienced, listen, you might have been in the game for decades plus. We still have to understand what the risk is. Where's the risk? Where's the risk? Where's the risk? Headline risk, gap risk, slippage risk, headline surprise news risk. My PC goes down, internet connection gets severed, broker goes down, exchange goes. All this stuff can happen, right? So it's not riskless. So just be aware of it, guys. I'm not overemphasize it, but please understand the risks you're taking if you decide to embark on this journey with us. Okay, so quick reminder, that's an old photo, isn't it? Jeez, I need a new one. Right, I've got decent experience, guys. I've been trading for, if you don't know me, I'm going to run through this very, very quickly because I hate talking about myself and all this type of stuff, but I want to give you some context of where I'm coming from. Almost 25 years, I think 24 years in the markets. I share with you ideas and thoughts that have worked for me and that I've observed from others. So I work with many traders. I see other traders coming through. I see traders doing well, see traders doing absolutely awfully. And what I get a good perspective on seeing different personalities, different styles, different markets, different stuff that maybe doesn't suit me, but I kind of see that and I go, right, that's going to be interesting to share with you. And I observe others. I'm in contact with some really super traders as well, so I observe and take things from them, and guys who maybe aren't on social media, aren't sharing bits and pieces out there, and I kind of share that stuff with you. I try to share tactics and ideas. I'm never here to preach a methodology. I'm not here to tell you how to trade. I'm just here to make suggestions, and maybe you'll make a course correction. And very often I get messages and say, hey, you know what, that helped me just think a little bit differently about my trading. It helped me think a little bit differently about the markets, about risk, about momentum, about whatever it might be we're covering. So that's my objective here. I don't claim to have all the answers because I absolutely don't. But I'm here to share with you what I believe is some of the best practices, but it's up to you whether you implement them or not. As always, you do your own analysis, your own research, your own homework. If something resonates with you, go and do some more kind of due diligence on it. Go and do some more preparation, some more analysis, some more digging, if you like, if it's a tactic, it's an idea, and then see if it fits in and blends in with the way that you trade and how you like to trade. So if you do make a change, if you do make an adjustment in your trading, just remember, I'm still here, by the way, I'm just adjusting things over in the corner of my eye. I know I'm not looking at the camera, but the things take time. So if you do make an adjustment and you do have an idea, you go, I'm going to implement that, just remember to say, as we talked about before, run with it for a while before you do any calibrations, adjustments, and course corrections, because as we know with trading, a sample size has to be a reasonable amount before you can decide what you're going to do with that. Okay, enough of that guy staring at you on the slide. Let's get out of here. What we're going to cover today: the key habits that separate consistent traders from the rest, or what I believe are the key habits. And ultimately, what I want you to do today is to go away with a daily process for you that doesn't feel overwhelming. So we've touched on this before, and it's something that I got a lot of questions about. And I thought this is a needle mover. This isn't the next big fangled strategy or this or that, the other, or we're talking about the intricacies of tape and stuff, which are important, don't get me wrong. But the separator for traders who are, even traders, to be honest, who are just starting to do well, and then on that growth path of actually, you know what, put my first green course in the first green year, second, third green years, whatever it might be, is they have something they do religiously. They've got a process. And the key here is to find it that fits you. It doesn't feel overwhelming, because I know what it's like, right? You see all this stuff on YouTube, you see all this stuff on, I'm not knocking any of these channels, right? There's some good content on there, but you see everyone telling you what you should be doing. You should do this. You should do that. Don't do this. If you do that, you're not this. I do this. I do that. And you're like, you know, geez, I don't even feel like I'm doing anything here. I'm doing nothing. And because it's very personal to you, you've got a limited resource, which is your time. We've all got a limited resource. Maybe you've got less because you have other commitments and stuff. And so we want to build a process that you can do regularly, that doesn't take too much time, that helps you get to the level you want to be. And that's going to be what we're focusing on today. So we're going to talk about checklists. We're going to talk about in-session things that you can do, not overwhelming, writing reams of stuff and nonsense, trade reviews, but more a focus on the replay action. So something that that you can do. It takes no time at all, and it's a massive edge. It's a massive needle mover, and because we want to have the most efficiency, right? We want to have the best ROI from our time, and mistakenly, many traders believe that sitting in front of the screen and clicking the button is the best ROI. Now, of course, that has to happen, but the best ROI comes from the extracurricular stuff, the practice, the repetitions, the process, the calibration of the conditions. You know, if you just manage to get into a nice flow and routine and a simple checklist before you go through the trading day, and it avoids that early loser that you catch at the open that puts you right in the red from the beginning of the day, and you do that once a week, that's a massive result. You know, same if you're kind of going through a replay and you're spotting something you didn't see in the heat of the moment, and I'll talk a lot about replays in a bit, and that just opens your eyes to something new, a way to approach stuff, then it's an absolute win. And I've got loads of chart examples, and I'm going to share with you the way that I do things. And again, I'm not here to say that I know that I have all the answers and you should copy me. That's not what I'm about. But it might give you an idea and go, okay, that's a good starting point. Let me adjust and adapt it to suit me. Okay, so the concept of this complete process. You know, a good setup and strategy is absolutely essential. A good mindset is essential. Psychology, we're going to address that stuff in later webinars. But today, I want to build the framework with you. I want to say you're serious about training, because there's no other, you ain't going to be on this if you're just after the next magic system, right? The title is purposely put out there to attract you, your type of trader, you who's taking this business seriously, who wants to make progress, who's perhaps struggled a little bit before, feels like they should be further on than they are. So I'm going to take that as an assumption. And if you're brand new, hey, you know what, some of this isn't going to make any sense to you, but you can come back and watch it. So the concept is a complete process. We want the routines, we want a structure. So every day, the same type of approach. So we do the same thing, the same thing, the same thing. So we calibrate to conditions. Our review process is the same. Our replay is the same. Our preparation is the same. Our reflection is the same, because that's how we identify patterns. Because the problem is, we just go through it. I've done this, guys. We go through weeks after weeks after weeks, and you just look at your equity curve. You're just so focused on that account balance, you're not really learning. You go, oh, I shouldn't have done this, I should have done that, but it doesn't really sink in because you don't have the process to review and reflect and take the value from the lessons, or you don't have the process to prepare and calibrate for the conditions so that you're aligned and you're using the right vehicle for the job. Using mean reversion of range bound environments, using trending and momentum ignition type trades when you're in a trending extension environments, that type of thing. I'm simplifying it, but you get the idea. Okay, so edges, Edge is absolutely built from those routines. And if you listen to my podcast with Dr. Steenbarger, I don't know why I put Dr. S in there, but everyone just knows. I have a podcast, guys. If you're tradersmastermind.com, you can Spotify, Apple, all the other stuff on there. It always interests me, actually. Every time now and then I kind of look at the pie chart of listeners. Spotify, Apple, you got Alexa, and then you get these weird, like, people listening on some odd devices. And it's by the by. The point is, I digress. The point is, on Dr. Steenbarger's podcast, Dr. Brett Steenbarger, top trading psychologist, if you don't know who he is, he said something that really sort of resonated with a lot of people. And I thought about it a lot, is that, it's the edge is when he works with these top end traders, these really, really, really good traders who have put multiple, decades or multiple years in of some serious numbers. So what's the separator, Brett? What's the difference? Hey, it's the routine. It's the structure, it's the preparation, it's the reflection, it's knowing when to push in more size. They prepare with more intent, right? They follow these structured playbooks they've got. They're logging their trades, they're reviewing, they're adjusting, they're adapting, and they manage themselves, not just their trades. If that's the habits that separate consistent traders, and we hear this all the time as well. If you listen to kind of some of the interviews with great traders in the Market Wizards books, some of the books, some of the actual books of traders who are kind of sharing their journeys and stuff. What's that guy's? Marty Schwartz, Pitbull. There he is, there actually on my bookshelf. He had a very, very simple process that he ran every day before he was trading the S&P. He did superbly well from trading the S&P. He would call his orders into the pit. By the by, this was a long time ago, but he had a process where he would kind of go through, and he called it the T process or something. Doesn't matter what the process is, but he had it the same every day. He'd reflect and review the same way every day so that he could really amplify and turn up the wick on his growth. And you think about traders that struggle, and I see this, guys, and you see this, traders that do this, and maybe you do this, like, hang on a second, maybe this is me. You don't have a review process, or you do it now and then. You don't really have a daily structure. You come swinging into the charts, you look at the charts, make a suggestion, have an idea where the trade is going, and click the button, right? And that's not going to get you where you need to be, because it's tough, this game. Too much learning, not enough reflection. It's that constant bombard fire hose of do this, do this, do this, do this. And actually, whoa, just put a pause on something for a second and let me reflect on the information I've got. It's like a trader I told you about earlier. He is in a position now where he's looked back on his 6 months of the year and gone, hang on a second, it was a good 6 months. I'm up nicely. How can I move the needle? I'm reflecting on my actual performance to make an adjustment, as opposed to trying to find a new strategy, a new idea. And the big thing that I think catches us all out at some point is the overwhelm. What I should be doing. I feel like I'm a failure because I'm not journaling 5,000 pages every night, or I'm not analyzing as I should be. And you end up being paralyzed and you don't move forward. So if you and I believe that to be true, let's emulate the habits of the super successful guys. If we believe that to be true, we've got to make some assumption here. We've got to say, okay, we'll take that and we'll run with that. So what do we need to do? And maybe you do little bits of this already, but hopefully this webinar will help you really fine tune it, smooth off the rough edges so that you've got something you go, you know what, every day I do this, every single damn day, and I know this is going to move me forward. There's no risk in doing it. It's a time allocation, and that is it. So we're going to build a pre-market prep routine. You plan, you zone, you bias, etc. The actual contents aren't so important. We'll run through those. I'll share with you mine. In-session journaling, what you do during the trading session, and a post-session review and replay system. Those are the three things that we're going to work on today. Now, of course, journaling sits separately. So trading journaling, as in what you're logging and stuff. And I've talked about that exclusively before. I wanted to pick things I could go deep on today as opposed to, now there's other things that are important, of course there are, but if you just have these three things, you prepare and you do the same thing every day before you even click the button. You've got something you do during the trading day or whilst you're trading that doesn't overwhelm you, doesn't take your eye off the ball, and you have something you do at the end of the day, regardless of the time. Now you have something that is your model. It's the way you approach things, and you can adjust, adapt, and move forward with it. Without that, it's very difficult to get progress. It's very difficult to measure stuff. And I'm not here either, reminder, to bog you down with stuff that's going to be a burden and not going to be valuable. That's not my objective at all. It's the stuff that's to move the needle in the quickest, most effective way possible and being efficient with your time. So let's start with the pre-market checklist. You've got three things to look at, I think, and I'll show you an example in a moment of how I break things down. Slightly adjusted, it's an old version, but you get the point. Charts. So you want to look at your charts. Well, duh, obviously. What's happened? Where are we? All right, so that's your levels. It's going to be, what happened yesterday. What was the overnight session you were trading the A's? If you kind of look at the Asian session, what was the US session? What was the London session? Just important things that, we don't have to go into details of this, but just the charts, right? Now your mindset. So how are you feeling about things? What are your emotions? Are you frustrated by stagnation at the moment? Did you take a stop loss that you felt was a bit harsh yesterday? What is it? Are you kind of pressured by something externally outside of trading? And any traps you can fall into. So something I might note down in the morning is, hey, just be careful on that first trade at the open, or the first trade at the open, because if you read that wrong, that sometimes puts you on the back foot and you end up being a little bit more eager for the next trade. Whatever the trap is for you. And then you trade ideas, your bias, your trades, your levels, maybe your targets, your headline risk, etc. So this is important. I'm not here to preach the checklist. You probably have an idea in your mind what's important for you. It should suit you. So your technicals and your calibration, like what do you need to look at? The daily chart, the hourly chart, the overnight session, the Asian range if you're trading currencies. What is it? What's important to you? Okay, that's your calibration. Then your strategy and trade ideas. What am I going to do today? How am I going to position today? Do I operate with a bias? Do I have levels of areas that I want to consider doing business at? Do I want to let the market unfold? What time of day am I interested in? What pattern? This type of stuff. Your emotions and mindset, I think it's super, super important to be reflective and honest about the way you're feeling. I'm feeling a little bit rushed today. I feel like I've just a little bit rushed. Okay, well, let's just calm things down. Or I've got to watch out for this. Just that emotional stuff that's very personal to you. And then the other thing I think a lot of traders miss in that checklist is your focus areas. So what are you working on right now? What's the biggest hurdle or challenge or needle mover or domino, as I like to put it, that if you knock that down, other things fall into place? Maybe it's trading on tilt for you. Maybe it's sizing up. Maybe it's adding to positions. Maybe it's making sure you don't overdo your daily loss limit. Maybe it's making sure you pull the trigger when you say you're going to. Whatever it might be, and just reaffirming in your mind what your goal is for today. So your technical, your calibration, your trade ideas for the day, if that's how you operate, emotions, mindset, focus areas, and goals. And one more thing here for kind of show you example is don't drown in data. You don't need every single damn level. You don't need every single bit and piece of information. What was this doing? What was that doing? It's irrelevant. Just strip it down to the bare essentials. Like there may be some key levels that you're interested in, sure, and maybe it matters to you is how you're going to position it. Actually, if we break and hold above this, I'm going to look to a line long, or hey, this is a key level that we faked out before. That's a trap level, whatever it might be. I think the biggest challenge for many developing traders is they look at too much. And I get it, right? It's human nature. Well, if I add more into it, I'm going to make better decisions. More information is better decisions. And that's never the case in trading. It's like there's a few key pieces of data that you know are valuable to you, and that might be it. You might be like, hey, what's my bias on the higher time frames? Long, maybe that's it. Maybe like, okay, where's my target? Where's my level? What's yesterday's low? There might just be a few things that are interesting to you. I'll come back to that in a second. So here's an example from you just about see this hopefully. The screenshot's not so great. So this is what I did this morning, right? So I come in this morning and I say, okay, this is the Nasdaq, by the way. I use the futures contract, and you can then parallel that into the CFD or the spread bet, however you choose to trade. A few things are interesting to me, so I'm not going to go through all of them, but I got my yesterday's close. I've got my overnight low, my overnight high. So it's kind of a little bit after the opening bell as I took the screenshots, putting the slide together. I got my ATR targets. So my target for the upside is 21,787, and I've based that on the expected range of the day because that's how I like to trade. It might not be your way, that's fine. To the downside, if we did do that, I had a daily bias, I had a long bias coming off the ISM number yesterday, the dip in the afternoon, blah, blah, etc. That doesn't matter. But the point is what matters to you. And then you use that to help you trade. So for me, I like to have a target. I like to have an area that, maybe I'm looking for if I want to jump on and hold the trade, or up to the point where I'm kind of looking to do business, a key level, this type of stuff. It doesn't have to be busy. I've got jolts marked on there because we've got the jolts coming up. It doesn't have to be busy. It's just a simple technical stuff that you can do to help you move forward. And this checklist here, if you want a copy of this, by the way, this is, I didn't want to kind of bog everyone down with stuff. Some of you have this before because it's I think it's it's quite old now. It's a PDF format, but if you reply to if you're on my daily email list, go to tradersmastermind.com, sign up for that if you'd like to, and you reply, Armand will send you a copy of this on PDF. I know many of you have this already, but I know there's some new guys here. And this is just a kind of simple PDF that you can either use, or you can say, hang on a second, this is an interesting question. And the idea for you is you go, no good for me, couldn't care less, yeah, actually, that's quite an interesting question that helps me think about something that's relevant to me. You grab that question and put it into your checklist. So bigger picture, your daily chart and calendar analysis, previous day's trade assessment, overnight session review, and personal helps you calibrate to conditions. So this is from the technical perspective, and you come up then with something, with your notes on the trading day. Okay, so to summarize, I guess, for the pre-market checklist is something very simple, very quick, that helps you calibrate to conditions that you can repeat each and every day, so you have the same process. I don't know if any of you remember. I know some people from all over the world here, but there was a rugby player called Johnny Wilkinson, right? This was years ago, many years ago, and he would. Anyway, many guys don't play rugby or watch rugby. Anyway, he kicked the ball. He'd do like the conversion. And he had this process of routine where he'd go through, and many sportsmen and sportswomen have this. They're kind of doing the same thing. He's picking up the grass, looking at the wind. He's doing this. He had this kind of strange process. He put himself in an unusual position, and it kind of became a bit of a meme, weren't he? Memes back then. I don't know why I'm using it as an example, but the point is that calibrates him, so he knows I'm going to do this every day. I'm going to do this every kick. And I think that's the same thing for great traders. Calibration, we calibrate ourselves to the day and do the same thing every day, so we know, hang on, something's not right here, or hey, something needs adjusting, something needs adapting. So create your checklist that helps you. Okay, other things to consider: off chart pre-market prep. I wanted to mention this. So meditation, breathwork, visualization, priming routines, these are things that you can add into your checklist to help you get moving, to help you get fired up for the day, to help. Also, you know what? It helps your subconscious. If you go through that checklist, you go, I'm ready for the day. I know my levels. I know what I'm looking for. I know what I'm waiting for. I know what I'm trying to achieve here. Okay, let's go. Whereas if you come in a rush and you're doing something different each time, maybe you're checking the 15-minute one day, the hourly the next day, this, that, the other, you're scrappy, and you can't then get into a rhythm that you start to build up the intuitive nature that we absolutely need to be a discretionary trader. So really consider about your checklist and how you're going to move forward with that. Okay, that's pre-market. Now, in the trading day, I just want to say this, right? I'm not a big fan of going crazy writing notes during the trading day. I've got my notepad here, and I'm showing you the stuff because you can't read my writing anyway, but I will write notes during the trading day. I will say, okay, hang on a second, that was my other notes, but I will write stuff during the trading day, and I don't want to go crazy because I want to be focused on the job in hand, right? You don't need a war and peace. I don't believe, and this is personal, that you want to take your eye off the ball too much, especially when it's coming out to an area that you're interested in doing business, a trade, something is maybe setting up. The last thing I want to be doing is in here scrawling down, all this stuff about trades that isn't really relevant. So, have a notepad there, take notes, jot down levels, ideas, feelings, risk, all the stuff that's important to you. That's what only thing you should be noting down. There's no point, I don't think, in wasting resources and taking your eye off the ball by jotting stuff down that is just completely irrelevant. So stay focused, stay accountable, keep your eyes on the prize, and make these small adjustments. Okay. So this is the stuff I really wanted to get to because I think this is really where the needle is moving. And if you've not been listening, come back to me. Come back to me. Market will still be there. Come back. Put the window on the maximum, the active window, and stay with me for these few slides because these will help you. This will help you. Okay. Many of you guys use TradingView, and I'm going to talk a bit from a TradingView perspective. I've converted a little bit to this recently. I used to, and I still do this, but my review process is super old school. I'd print charts out, I'd write them. There's something about doing that that I love, and I love doing that kind of on a weekly basis as well. iPad, Apple Pencil, whatever the hell software you use or hardware you use, annotating. But TradingView now Replay has really upped their game. I know many of you use TradingView. If you don't use TradingView, maybe your software does, and I think TradingView is free anyway, if you want to use it just for the replay. And also Pepperstone links in with their accounts through TradingView, so you can just connect them up and you can trade through TradingView as well. So I'm not here to shill TradingView. I just think that this is a good platform to use. Okay, so there is a function in TradingView called the replay function. I know many of you use this already, but do you have a repeatable process? Those of you who don't, maybe you can go and look at this. I have to shout out to a couple of other traders for kind of really pushing this on me and going, you should be using this, printing off your charts, you dinosaur. Yeah, okay, fine. So here's a way to really kind of fast forward and get more reps in as you're trading, for your trading. When you're running the day, run it on 3x speed and run through the day twice. That's quite quick, but if you operate off a 1 minute chart, set your chart to 1 minute, start the replay and run it at 3x speed, and just sit back and watch. And just watch. And I'm telling you, in fact, I promise you, you will see things that you've not seen in the trading day. Even if you're not there all day, you will see things that you don't normally see when you're in the heat of the moment and there's a burden of performance and pressure on your shoulders. I need to make money. I need to make great trades. You will see stuff. You run it twice on 3x speed. It's quite quick, but it helps you kind of calibrate, see the bigger moves that are important, not get bogged down in the little intricacies, but start to see the rhythm. You start to see how the moving average changes if you watch that, or any of the indicators, how the VWAP starts sloping. You see things through a different light. Super, super valuable. Okay, once you've done that, now you go back and as you've done that, you highlight areas that you might want to look at a little bit more closely. So ignition bars, reversals off key levels, VWAP bounces, breakouts, springs like Wyckoff springs or liquidity grabs, if you want to call them that, areas of interest, stuff that's relevant to you. Then you go back and you run this doesn't take any time, by the way. This is why I'm sharing with you, because I think it's a real ROI. It takes no time at all. Then you do a slow replay at half speed or 1 speed, and that's where you annotate your thoughts, whether you do it on a piece of paper, whether you annotate it on the chart. And you go through and you say, you don't do the whole thing at half speed, right, the whole day. You go through and you say, we broke out there, so let me run it up to that point. Let me see what the build-up was like, and let me see if there's something I've missed. Let me see if there's something that I didn't spot during the heat of the moment, or maybe you weren't at the screen, but you're just trying to get more reps in with that breakout play, or that reversal play, or that pullback to VWAP play, or the early range breakout fake play, or whatever it might be. You run it, and you run it half speed, 1 speed. You start to jot down notes. This is such a good way of getting more market experience without having risk capital in the game. You're already doing that. You're already taking risk. You're already putting the trades on. This is how to get much more bang for your buck and run through stuff again. You go, you know what? I didn't see that. That's interesting. I'll show an annotated chart in a moment. And then you talk through the trades out loud. So then you run through the trades that you did and you kind of build that process in. So this is something that I did. Listen, some of this grammar and stuff isn't perfect because I took it as it was. Sometimes I'm just tapping away. So this was yesterday's action. I ran through the whole thing and I run through it as an example. This is not me to tell you this is how you should do it. Absolutely not. But as an example, I'm going to run through that open. And I'm going to start to run through the thing 3 times trading speed through the whole day. Then I want to run through that open and then reverse off the open and push back up because that was really what was interesting to me yesterday. After that, there was some stuff and I started to make some notes. and you start to see things that you didn't see during the trading day. So the big clue, and I'm going a bit technical here, and I'm going in the weeds here, but stick with me. And this might not be your thing. Maybe you're not quite on this kind of approach. But one of my models is that at the open, when there's activities there is at the moment, is to be very focused and spot these kind of shorter term opportunities, as well as kind of looking for catalyst based stuff in on higher time frames. So one of the things I noticed was, hey, when we had the drive and we pulled back yesterday, this was the Nasdaq, and we pulled back off the open. There was a point where it looked like it was bullish and it was going to push higher, right? We'd already done a little tiny flag, we'd pushed higher, pulled back, and then we got that little kind of ignition bar, if you like, to the downside, and it overspilled a little bit. Now, this is where I thought, actually, you know what? This is very interesting, because if it's genuine momentum, that will be bought up very quickly, and you can bracket. Oh, can you see my? Yeah, you can. You can bracket the high and the low of these two little. But I know I could have been a bit more zoomed in, guys, but you can just about make this out. Yeah, this is a momentum bar here, a low here. So this to me is the momentum. These two candles get just extended. When it pushes back in, this should rally straight back up there. And that's something I quite like as well. When you get a shock in the other direction, then it immediately gets brought back up. That's telling you the key. But I started to think, you know what? There's actually a trade here when you get momentum in one direction, and then you actually use that and take both sides of the break. And so I appreciate I'm getting into some weeds here and overcomplicating things maybe from this webinar perspective. But the point is that I start to now see things on this day, even after hours I've been looking at charts, that I didn't see in the trading day itself yesterday. I didn't acknowledge this. You just see this as through one lens. This megaphone pattern stayed clear of this. That was the ISM data. Bit of a choppy after there. I started to note down some of the stuff. The first VWAP tag, the hold above, EU close. You don't want to make too long on these little momentum bars for the break and the alternative. I started to make some notes that are important to me. Okay. So this doesn't take much time. And I'm telling you, it will highlight stuff that you didn't see. No matter how much time you trade, no matter how much time you can allocate to trading, just doing something like this helps you so much. And even listen, printing it off and doing it. I'm kind of swinging around this way now. Yeah, fine. But doing some form of trading review really, really helps. Just cement the lessons and the price action stuff that's important, and let's leverage on the technology we've got. We're in a beautiful, beautiful time to be a trader, where there's so much technology, it's so low priced, and it's so powerful. Let's leverage on it. Let's use it to our advantage, right? So that's kind of, I think, the way to approach it. So once you've done that, and you go through the trading day, or you go through the week if you're a higher time frame trader, whatever it might be, and high speed, then zoom in on the areas that are interesting, you start to see and note down the stuff that you maybe wouldn't have seen before. Then you go replay your own trades that you did. So then you go, okay, that was the market, that was the key levels, those are the reversals, those are the breakouts, those are the stuff that are important to you. Now what do I need to do? I need to go back and look at the trades that you took. So the actual trades that you took, and through the lens of, what could I have done better? Did I ignore a signal? What would I try differently next time? Did hesitation or emotion interfere? And the questions need to be aligned with what you're working on as a trader, obviously. But the point is that you're learning. And if you do this every day, you start to get good. You start to get good at doing this. You start to get good at spotting some of the patterns. And here's where the needle then moves. The next day, or whatever it might be, you go into the trading day going, hang on a second, this was a pattern that I've missed. This was my pattern that I need to adjust. This is a market pattern that I need to get on. You start to see things that others don't, not only in your own execution, your own trading, your own approach, but in the market, because you're really focused on what matters to you, which is the performance of the market around the levels that are interesting to you. And the more you do it, the more reps you get. You're now doing, if you're doing the replay, right? You're doing the replay of the whole day twice. You're doing the replay of the levels that are interesting once, right? And you're replaying your trades. This doesn't take a lot of time. It does not take a lot of time, but you've now got, with 7 repetitions over someone who's just traded a day. Now, you do it over a period of time, then you're going to be 7 times as further down the line. Because Linda Raschke says, the name of this game is to stay in business for as long as you possibly can until you get it. Most people run out of capital, most people run out of momentum, most people run out of desire to do it. But if you can kind of really fast track and squeeze in that stuff and say, hey, I'm getting these reps and I'm learning, then you can be way ahead of the game. You don't have to be putting in, the same amount of hours as someone who's just sitting in front of the screen, clicking buttons, walking away next day doing the same thing. So you build your own process, create that daily structure. You start to see things you otherwise wouldn't. You get the constant reps. Oh, and one thing that I don't know if this was around for a while, there's a paper trade function. So in TradingView, you can kind of click buy and sell, and you can kind of dummy. I don't even know where it's attached to, some dummy thing. But at the end of it, it says, oh, this is how you trade it. So you can kind of trade it in a perfect manner. Obviously, if you've been trading the day, you know how it's gone. But you can put yourself through these drills, through these routines. Let me see if I can trade that breakout perfectly. Let me see if I can, trade it, take a loss. You can put yourself through this process where you don't have to have money on the line. You don't have to have skin in the game. You can learn in the safety of a replay, which is very, very different from a demo, because you can do it when the market's shut. You can do it at the weekends. You can do it whenever you want. Excuse me, as opposed to running in the real live conditions. Accelerated growth. So super important. I think please consider it. So we talked about the pre-market checklist. We talked about we touched on the kind of intra-market or during the trading day do's and don'ts. And again, from my perspective, of don't overdo stuff in the replay function. So something to consider, implementation tips for you. Start by building your at the end of the day, let's go back from what we're trying to achieve here, which is to create a repeatable process that you can operate every day you're trading. And maybe you're not trading every day, that's okay, but you want to maximize the time you're in front of that screen. Just maximize that growth, fast track that curve so that you're not doing what everyone else is doing. Right. And again, we're emulating the guys who are really, really killing it. Dr. Steenbar just said it. You don't have to listen to me, you don't have to listen to anyone else. Listen to a man who works with high level traders. The separator, Dr. S, the separator, Mark, is they have habits. They prepare for the trading day, they review, they reflect, they do this work. They're the ones that are still in the office on a Friday afternoon running through recordings of their trades, running through the market replays, running through stuff, looking at things. We don't have to burden ourselves with overdoing it and bogging ourselves down with all the stuff that's maybe unnecessary. But at the same time, I challenge you to come up with something that doesn't take much time, but that you stick with for a period of time. So start by building that pre-market checklist, a really good way of calibrating for the trading day. Here's something that I think we miss. We're human beings. Having the discipline to give yourself time to do these things. It's like it's like sleep, right? No one really has trouble waking up. The alarm goes off, you get up, you got to do stuff, right? You need to do whatever you need to do. But the issue comes with the discipline at the other end. Just a little bit longer watching your Netflix, a few more pages of the book, whatever it might be. That's where the discipline comes in, and that's where you're tired because you go, oh, I'm getting up on time, but actually I should have gone to bed early because the discipline is lacking there. So it's probably not the discipline to do the stuff. You can do it, but you need to have the time and say, I need 15 minutes to do that every day. I'm not going to let anything bleed into that because that's important to my trading. That review, that replay is 15 minutes. I must give myself at least for the next 2 weeks every day or every other day when you trade. The pre-market checklist, I need to be in front of the screens 20 minutes before, 30 minutes before, whatever it is, because it's important to me. I know that's what's going to move the needle. And it's the discipline to do that that will help you get those reps. It will help you build and compound that framework that will help you move for trading. And I say, I think the replay function is very, very good on TradingView. I'm sure other tools have it as well. And there's a question to ask yourself, which I thought is very, very apt. Are you, let me put it in the I tense. Am I improving or just building a world-class tolerance for pain? And I thought, what a great way of looking at things, because many traders go through this as like, I've been through the mill, I've lost some money, I've recovered some money, I've had some swings, I've had some bad beats, I've recovered, I've done this, man, I can withstand anything. It's like, okay, good, it's important now, it's really important, resilience, but are you actually improving from that, or are you just doing one-sided and just getting knocked down, getting back up, getting knocked down, getting back up, knocked down, getting back up? Because you separate yourself from the pack by doing that, absolutely, because most people go, you know what, I've had enough of this game. This training's too hard. I'm done. I'm out of here. So that is separated. But are you improving and learning from those bits? Are you reviewing, reflecting, and adjusting? And all these things that we talk about, the pre-market checklist, the journaling through the trading day, the post-market review, reflection, and replay, that helps you improve. And so you build, yeah, oh God, took my max day, lost them again. I got stopped out. And you get back up, you get back up, you get back up. But that's only good if you go, hang on a second, I'm learning from that. And so use it to your advantage. And a good, honest question to ask yourself is, say, listen, am I just building my pain tolerance here, which is, we need to be kind of robust as traders. Of course, we do resilient, fortitude, all that stuff goes without saying. You ain't going to get anywhere without that. So I'm glad you're doing that if that's you. But am I actually improving? Have I got a process that's repeatable that allows me to improve my trading, or am I just going through going, oh man, I got, never mind, carry on. And I'm looking at my P&L, I'm looking in the rearview mirror, and I'm trying to make adjustments based on the conditions we're in, as opposed to saying, you know what, maybe I need to review and reflect a little bit more. So something that maybe is worth asking yourself. Okay, before we get to the last few slides, guys, a challenge for you if you would like to take it. Do at least one replay and review this week. Submit 3 learnings in your journal or pod. So in other words, what did I learn from the replay? And write that in a paragraph and put it in your trading journal. Or if you operate a trading pod, submit that. And then 1 trade to dissect in detail and rerun it. So notice I'm saying don't go and do every day, yeah? Because I know that that's a real friction point. Like, oh, I was supposed to be doing this, I didn't do it. I really don't want you to do that. I want you just to try something and go, I'll just do 1 replay. If you give me 10 minutes this week or next week or from now until next Tuesday to do it, and you say, you know what, I can do 10 minutes, and that just starts the ball rolling. And then I think, once you get a taste of it, once you realize how valuable it is, you'll want to do more. And so my kind of objective here is not to say you should do a replay every day. I think that's great. But if you're not doing it, do a replay and review, however you like to do it. And just do 1 this week, right? If you've not done it before, do 1 this week and see how you feel with it. And if you think I hate it, then fine. You say, you know what, that Mark's an idiot. He talks nonsense. I'm not interested. But maybe you'll go, you know what, that's valuable to me. 3 learnings, submit it to your journal. If you've got trading pod, you do that. And then 1 trade that you took, can be a scalp, can be a swing trade, whatever it is, just dissect it in detail, rerun it. This doesn't take you much time. And in fact, you know what, if you want to skip the middle one, just do those 2. I'd say that's a 15-minute job. You do 1 of them. And my objective is to start the momentum. And if you just do that for me this week, you just say, you know what, I'll give it 15 minutes. I'll give it 20 minutes of time. Let's see how it goes. You're like, you know what? This is worth doing, man. I feel like I can get a benefit from this. So, final thought here for you. The edge you think you need is already there. You just haven't structured it yet. And the way I say that is that it's not more stuff to learn. It's not more strategies. It's not more price action. It's not this. Yeah, it helps, man. Of course it does. I'm not saying it doesn't. But you've probably got a lot of lessons in there that haven't been learned correctly. But now if you dial yourself in and go, here's my process pre-market, here's my journaling process, here's my review reflection process, you're actually maximizing the benefit of those days that don't go your way or do go your way. You're doubling down on the learning, and actually then you start to extract the edge out because you start to see things you wouldn't have seen. You start to see how you perform under pressure, perform under different market conditions, the challenges, the good, the bad, and you can eke out that edge and go, you know what, this is the edge now. I know my edge. I'm going to extract it, because sometimes you spin your wheels, spin your wheels, spin your wheels, and maybe you get to where you want to go by doing that. Maybe eventually you get traction, but actually having a structured approach each day that you operate. Again, I want to reiterate, you're not taking ages here. I'd rather do something than nothing. If you're really time poor, you don't have the time to do something. Go, this checklist takes me 3 minutes. This review I run through, takes me 5 minutes. You can do that, and that then puts you in the category of the super traders who are there doing the same thing, and learning and repeating. Okay, so next week we're going to look at your playbook. So we're going to kind of dial into developing strategies. I'm reading from my slides here. Develop strategies that align with your strengths, style, and market view. Identifying your natural edge and structuring trades around it. Knowing when to deploy, when to stay on the sidelines, building confidence through clarity, not complexity. Because hopefully you see, guys, I like to simplify things, right? I don't want complex stuff. I'm not, that's not me. I don't like complicated things. I like to keep things simple but effective. I want to have the most efficiency possible when trading. I want to don't want to be bogged down with stuff. I'm not kind of someone who likes to sit there and log every single thing. At the same time, I want to do things that I know are going to move the needle for me. So that's the approach. And also what suits me, like what suits me and what suits you might be completely different. And I'm really, really focused on that as well, of like, okay, do what works for you. You don't have to do what everyone else does, but just pick some of the best things that work for you. Okay, let's take some questions. If you've got any questions, guys, I will happily take them now. A little bit better timing this week. A little bit better time. By the way, thank you for coming. If you're new here, you're very welcome. If you're regular here, you're obviously welcome. You can check out Traders Mastermind. Got a podcast, got a daily email. We're actually closed to members at the moment because we're operating the Q2 pods, getting those nailed down. We do have that might open up at some point. But the daily emails completely free. I send that out every day. Of course, the podcast is free. These webinars, thanks to Pepperstone, you're able to do these. So you can join the gang without having to have another monthly bill or any of that nonsense. Okay. Sorry, David. Yeah. How do I access the PDF? If you go to tradersmastermind.com, you sign up for my daily email. I send that every day. The one coming due tomorrow morning. Reply to that. The guy who manages my inbox, Armand, he will just say, "Hey, can I have the pre-market checklist PDF?" I know this is all. There's a few hoops to jump through here. We're traders here. We're not kind of slick bloody operators. If you do reply to that, he will just send it to you directly as a PDF or a link on the site. You can download it. So yeah, reply to my daily email. Say, "Hey Armand, buddy, dude, can you swing me a copy of the PDF?" I've already primed him and said if someone asks, then please send it to them. Then he will send you a copy. But the easiest way to do that is to reply to the daily email because that's the inbox that's monitored. And I've already primed Armand to check that. So hope that makes sense. A little bit too complicated maybe, but I'm sure you can figure out. You're a trader. Okay. Sandeep says, thank you, David, for asking that question. Sandeep says, good evening, Mark. Good evening, Sandeep. Have to say the biggest issue I have is getting into a routine. We got it, Sandeep. We're hitting that nail, pal. I have a day job, but as I work from home, I should really make the most of the morning markets from 6:30 till 10 a.m. Any suggestions on how I can enforce this? Think I spend far too much time watching charts or end up getting distracted. I do have a more refined checklist now, which I generated last week. Sandeep, my man, you are in the same boat as a lot of traders, right? Maybe you do some stuff from home, take some calls from home, don't have the time to stuff, but here's something that you can do. I have a timer, right? This is a timer. And very often, I will come in and say, and I'm a human being like you guys, right? Yeah. Maybe some people would beg differ, but you're way too disciplined to be human. I'm a human being, right? I get, I lose motivation, I get distracted and stuff. I will set a timer and say, right, I am going to look at this, whatever I plan to do, 15 minutes, 5 minutes, whatever it is. Bang, I hit the timer, off we go. And that might be, I'm going to review my trades. I want to do this. I want to do this specifically. So, a way to build discipline in that is to say, hang on a second, I have this time window, sit in front of the desk, but I know you might get distracted with this, that, the other. You go, no, here we go. I'm going to do X. This is my goal. I'm going to hit my timer, bang, off I go. Right, and now I will know, just focus on that for that period of time. Now you may go over, that's fine, but the point of the timer is there's an audible, right, I'm starting now, and it puts you focus on the job in hand. Because before you know it, you sit there, you go, I'm going to review charts, you're flicking through stuff. At the end of the day, you kind of look, clock it, you've got to do something, maybe you've got a Zoom call, maybe you've got something you've got to do for work, and you've kind of not done anything productive. So it's just being more intentional, Sandeep, about that time and saying, I have got the opportunity, I am available during the trading day, and you know what's going to move the needle the most for me? Actually reviewing my trades, doing a market replay. How long is that going to take me? 6 minutes. 6 minutes, go, done. And then being more intentional about that. So I think the timer is super effective. That's a great question. Okay, Alex says, thank you, Sandeep. Alex says, how do you know if your daily routine is too rigid or too loose? What signs show it needs adjusting to fit your natural style better? That's a great question, Alex. I'll ask you this, pal. How does it make you feel when you do it? Do you feel like, oh God, I've got to go through a daily routine? Or you're like, you know what, I'm going to get a daily routine. Does it energize you or does it take energy away from you? There's a word for that, isn't there? Someone's got it. Does it de-energize you? You know what I mean, right? And trust your judgment on that. You know, if you're there and you're going through stuff and you're like, why the hell am I even looking at this? I don't care. The price of gold is doing. I don't care what yen's doing. I trade this, or I do. You know, there's stuff that you just got to be honest about. And maybe you look through your routine and go, do I need that? Do I need that? Do I need that? I've done it with traders. I've gone, get rid of that, get rid of that, get rid of that. You don't need that. Get rid of it, get rid of it. You know what's important to you is this. And so, you know, you want to kind of prune it down to as much as you as little non-negotiables as possible, and then you add things that might be relevant to the trading day, right? So you might have a strict routine. If I want to see the overnight session, I want to see like what happened, the highs and the lows overnight, the overnight range. I want to see the daily chart. Maybe that's non-negotiable, the headline risk on the day, but maybe there's a current rhythm at the moment that actually everyone's focused on. Some news has been coming out with Trump and China, as you go, I'm going to allocate a little bit of time just to make sure that nothing's come out overnight on, that might affect the trading day. Or actually, everyone's watching gold at the moment. I'm going to check that. So there's a little bit of adjustment that you might add into it that says, hang on a second, these are my non-negotiables, 4 or 5 points, and I actually add some things on that I think are going to be relevant to the trading day. But gut feel, mate, listen, this game is a lot about instinct and intuition. And a lot of people push that down because they're taught wrongly, I think. You shouldn't be emotional as a trader. You shouldn't feel emotion. Get it, you push it away. It's like a beach ball analogy. Beach ball pushing under the water eventually pops up and smashes you in the face, right? You respect the fact that I don't like doing this. So what can you do? Sure, there's going to be stuff that you have to do in life that we don't like to get us where we want to be, but I don't think it's making it a burden. I don't think it's making it a chore is the answer. I think it's finding a way to do it, make it fun and interesting, and keep the motivation going, and not so much that it bogs you down, and not so little that it's worthless. Don't fall into the trap of saying I don't need it, but at the same time, get something that excites you and that's going to help you out. Okay, hope that's answered your question. Lever, yeah, gets first time. Lever Nally. I reckon I nailed that. You can't tell me if I'm right or wrong. Simple question is, can we get the slides? I won't give you the slides. So I won't give you you know what? If you want the slides, mate, you can email Armand and I'll get him to sort them out and export them to PDF. That's fine. Happy for you to have them. There you go. I was going to say, no, it's too much. But you know what? Email Armand. He will be really pleased with me giving him more work to do. He manages the inbox, replies to my daily email. That's the easiest way because I know it guarantees to get to me or get to him and say, may I have a copy of the slides, please, from this webinar? And I'm more than happy to share those with you, pal. Sandeep says, many thanks, been attending these for several weeks now. Thank you for coming, Sandeep. I hope you're getting value from them. Maybe you must be because you come in, you're spending your evenings here moving forward. And I hope it's helping you move the needle in your trading, pal. That's my objective. It really is. Gary says, agree fully with maximizing what you learn from trades that don't work. Thanks again for the webinar. Thank you, Gary. I know you're regularly on here as well, pal. You guys, lots of great questions here. And we've got a few minutes. Okay. David says, hi, Mark. I understand the bias comes from the daily and entry comes from the 1 minute. But what is the actual use case in your trading of the 5 minute and what is the use of the hourly? I'd like to categorize the use of each time frame and mirror your process, but sometimes I fail to understand how you're using the time frames. Which one is for areas of business to execute on and building ideas? David, that's a good question. And listen, I don't think mirror my process. I know that maybe resonates with you, and that's fine. But the key is really to build your own process, right? It really is. And the going down the time frames is this is the way of thinking. Is the bias always comes from the daily, for me anyway. Like some traders don't give a toss about the daily. That's fine. Some traders don't even want a daily bias. That's fine too. But for me, I go, right, do I have a bias on the day? Today, I'm like, okay, I'm a long bias. Yesterday, I was like, okay, I'm pretty neutral. I'm not quite sure how we're going to play out after this. We've got ISM lower. That's fine. So the daily comes with that. Is there something that's setting up? Have we kind of trapped some traders? Is there a higher time frame pattern in play? That's always my daily calibration. Okay, now hourly is for me is so that I can see kind of multiple days in one and see something that daily just doesn't give me. Again, personal thing. I can see what's happened overnight. I can see the highs, the lows. I can see the levels that I mark on, like the court case, the Moody's downgrade. Is that relevant still? I've actually taken a bunch off because we had all sorts of other breaking news, and now we're getting more that I think is overriding it. I peel those off my chart so I can kind of see it and go, you know what, we've done nothing since the Moody's downgrade, or you know what, this, that, and the other, and that helps me calibrate. And then during the trading day, I'll be looking at 1 minute if I want to execute, and I'm like, hey, I want to see this, or and it might not even be that precise. I might not say I want to see this. I'll be like, hey, if I see something that helps me get long, that triggers a trigger for me, a rally, a pause, a drive, a pullback, a consolidation above highs, then the one I will probably execute. Well, I will execute on the one. I like to look at the one. And I actually don't think that's that great, only because I've been brought up on that for 20 plus years, looking at the 1 minute. I feel like that's my chart. I try to kind of peel myself back and kind of assess things on the hourly and maybe the 5 minute. Now, you're like, oh, so why are you on the 5 or on the 1? You know what? It often depends on what's happened the last few days. If yesterday is completely irrelevant to today, like I think, where are we now? Yeah, like yesterday, now where we are trading now on the Nasdaq, for example, the yesterday's irrelevant. We're out of it, so I'm not that bothered. I don't need to see the bigger picture. All I care about is the level from multiple weeks ago with that high, right? And so where the 5 and the 15 may come in is that you're trying to get on your screen. Hey, let me simplify this. I'm just trying to get on my screen there, on my main trading screen, a picture of what's happening and what I think is going to happen. That's it, man. I'm not trying to be smart. And sometimes I might look at the hourly. Sometimes I might go down to the 5 and go, hang on a second, that was a key level. And then maybe there should be more symmetry to that. But the idea is that you go down and you say, hey, my final output when it goes through the whole process is I've got an idea of where we are, where I think we're headed. And that answer might be, I don't know where we're going. I need to see this level break first before I even consider it. And then I go, okay, actually, I'm going to do some business there. So the hourly helps you. Any of the higher, so the daily, I think it should be in everyone's chart analysis, right? Just get a bigger picture. Then you go to the mid stuff, and that can vary, like what time frame you look at, but you kind of want to put in a few days, 5 days or so, and that might be a 15 that's fine for you because the last 2 days were way to the downside and they're not in interest anymore. Or it might be you need the whole 5, so you put the hourly in and you look at it and go, what have we done? Where are we? What's important? And maybe you need to go higher so you can see, hey, where are we relative to that data point? I need more days in, or I need less days. And so you calibrate to that, and then the 1 becomes the place where you do the execution. And so finding that for you. But here's something I'd say, David, is that you don't need to go crazy and go, I absolutely have to be on this time frame or that time frame. The higher time frames help you get calibrated to the conditions. The middle time frames help you remove the noise, and the lower time frames, if you need them, may not need them, help you fine tune the execution. That's the process. How you mix those up is kind of quite personal. All right, let's see if we can get rolling here. That's a good question, David. Hi, Mark. This is Robin. Hi, Mark. Thanks for the webinars. Appreciate it, pal. I had a question from last week's subject. If a block gets disrupted, say I skip trades, break rules, or face emotional interference, do you recommend resetting the block and reset the count, or logging it as is? I recommend resetting, Robin. Why? Because part of the benefit of the block risk method is that you feel good for doing it for a chunk. And then listen, if it's becoming a problem that really starting to bog you down and you start to abandon it, then by all means log one and say, I'm going to do better next time. So maybe this is a bit of an answer sitting in the middle, but let me define this. If you think that you could do one and it's one slip up and you want to do one whole block without any slip ups, do that, because that's the best outcome you can have. If you do a block and you're constantly slipping up, and it's a work in progress, then fine, log it, but just try and do better next time. So if you do 2 slip ups, you break the rules twice out of your 10 risk block, do it again and say once, and kind of try to get to that perfection. Because what I don't want you to do, Robin, is to get disheartened and go, damn it, I keep trying to do this 10 in a row and I keep slipping up and I'm a rubbish trader, because we've all been there. You get disheartened, you abandon it. So if it's something you think you can fix, start again from 0. If it's something that's constantly coming to your trading and you're trying to turn the ship slowly, then log it and try and do better on the next block. Hope that answers and helps. Like everything, you know what? The thing is, guys, with all this stuff, is all context. I don't. I think very rarely do we have black and white, and that's the beauty of trading, right? We've got this grey area, which is where we operate and where we can do very, very well. Okay, I will. If you have to go, I understand. It's fine. I know we've overrun a bit. I will answer all of your questions. If you've taken the time to come here and spend some time with me, the least I can do is help you out and answer the questions. And I don't promise to have the answers. If I can, I will help you. If I don't, I will try to guide you somewhere else. But if you have to go, I understand it as well. I'm not going to be as if you care anyway. But I thought I'd get that out there. Right. I think we've only got a handful of questions left anyway. So hi there. Wait, I've skipped one. Sorry. No, I haven't. Yeah, Emanuele says, hi there. Thank you so much for your amazing tips. I was wondering, how do you cope with revenge trading? Ooh, you open a can of worms here, pal. I'll try and be sort of quick and succinct with my answers, guys. The revenge trading is something that used to nail me badly, right? I was someone who was like, I need to get the money back, man. I need to get the money. I swear, I'm like, I need to get the money back, man. But I think you know what? It's being aware that you feel anxious and frustrated by that. And the thing is with revenge trading is, it's no good. It's never going to end well, right? You might get your money back won by punting away, but you know that's a habit you want to remove. Here's how to frame it, buddy. When you get something that annoys you, which is how revenge starts, something frustrates you, you get stopped out, you hit a daily loss limit, something happens that triggers you into that mode. Learn to identify that mode in your brain and go, I'm feeling it now. I'm being tested. I'm going to walk away. I'm annoyed. Every single fiber in my body wants me to get back in the markets right this second because I want to get that money back. That's my money. I want to see my P&L back at that level it was before. And I want it now because I feel bad. Recognize it and step away. Now, I know it's easier said than done, but if you can just be in tune with your emotions and be okay with it and say, you know what, I am annoyed, I am frustrated, that's okay. What's not okay is reacting to that. Everyone gets annoyed, everyone gets frustrated. Sure, it dampens off over time. Sure, you start to be more seasoned to stuff, but you're still a human being. And so your job is to learn to go, you know what, I'm annoyed at that and I need to let that dissipate. And just having that as your North Star and your objective means that actually, when you go into the trading day, you go, hey, if I feel like I'm about to revenge trade, my number one objective is to walk away. And when we walk away, every fiber in your body wants you to stay and trade, but treat that as a win. And that's the only way to get through it, is to just kind of do that. Another way to do it, pal, is to visualize it. Put yourself in the condition mentally where you've done something that makes you want to get that money back quickly, and then imagine yourself feeling angry, feeling frustrated, feeling all the stuff, and going, no, I'm feeling that frustration now. I'm going to walk away, right? And if you can do that, then in the heat of the moment, you've got much more chance of being able to walk away. Okay. Well, have I got a million messages? Nothing urgent. I'm just going to check there's nothing urgent here. Sorry, guys. There's nothing urgent. That's what's nonsense. Right. I have actually got on Do Not Disturb, so if it's an urgent call, it will come through. But when you've got 13 messages, you think there's something going on. That's a good question, Robin. Okay, Alex says, how can a trader simplify their review routine to extract key lessons without getting lost in overanalysis or perfectionism? The key lessons are, here's how you do that, Alex, is you focus on the key parts of the chart. So you focus on your trades that you did. You don't look at the whole. That's why I run through the chart very quickly the whole day. You focus on the areas that are interesting to you. So is that breakout something that you trade? Is the reversal something you trade? Run through that and learn and note down and really kind of focus your energy on the things that matter. It's like if you're reading tape, you're a tape reader. You don't read tape all day. You read tape at the key levels, at the open, the prior highs, back to the opening print, of the reversals. So focus your energy in the areas that are interesting, and accept and this is something you put here, the overanalysis or perfectionism. Accept that we live in the imperfect, but that's where the opportunity is. So I know it's different. I know sometimes it's very difficult. Like I want this, I want to be this dialed in and this dialed in, A, B, C, D. But actually, the opportunity comes from the imperfection. This is why markets move, because they are imperfect. You've got a hedge fund desperate to get in. You've got someone desperate to get out. You've got someone reacting to news. You've got institutions who have missed this rally and they're panicking to get right. You've got trapped. That imperfection is where we create opportunity. And so if you see that imperfection as, hey, I don't want it to be perfect. It's never going to be perfect. My trading is never going to be or me as well. My trading is never going to be perfect, but that's okay. There's still plenty of opportunity. And actually, I'm glad it's not, because that means there's people who are better capitalized than I am. There's people who are better resourced than I am. And if it was perfectionism, they would perfect it. They would just throw resources at it and perfect it, but they can't. No one could perfect it. And so I need to accept that and say, hey, I'll do the best I can in my little area of the trading world, but I can't make this as perfect, and it's never going to be. And actually, that's why the opportunity presents itself. Okay. I'm losing track of these. David says, when running the whole day back on replay, are you only focused on areas of business on higher time frame on the 1 minute, or are you willing to review any 1 minute setup you see? A bit both, David. I will look through and I will say, hey, I didn't see that in the heat of the moment. Should I be focusing on that? Just like I think let me see if I can bring it up. Something I've noticed quite a bit at the moment are these ignition candles. There it is. And then kind of bracketing that ignition zone and potentially having a trade if it aligns with my higher time frame bias. And there's other things that come into play with this, but saying, hey, something's gone on, like algos have come in, markets come in, something interesting has happened. Often that's reversed or it's continuation. Can I do something with that? And so something I'm doing at the moment is being very focused on these, and I've marked those off with these little arrows down here when I went through the kind of longer time frame, going, okay, big range bar, big range bar, big range bar. I wasn't involved in these at all, but I want to look at them. And so, yes, the stuff that's interesting me is the open, fine. But after that, I'm like, okay, I'm looking at the stuff that I want to improve and something I think that there may be edge in. And so for you, it's like, okay, the areas that you want to do business at, fine, but also skimming through and saying, is that something that's interesting to me? I don't normally take an afternoon breakout, but maybe I should. Maybe I should be adding that to my playbook. Maybe I should be adding the VWAP reversal fake to the playbook, or whatever it might be. And so I think that's important, is kind of constantly evolving to the conditions that we're in. Okay, do I even need to change that screen? She left that up. Okay. Okay, guys, you are really on point today, and I thank you. It makes it worth while when I know that people are listening and you're enjoying this. So thank you, guys. Okay. Do you know what? I lose track of this stuff. There must be a better way of analyzing this bit. Here we go. Lee says, hi, Mark. Great daily email today. Thank you, Lee. Really spoke to me. Wake up call. Thank you for everything you do for us and teach us. Sincerely, Lee. Yeah, the email, I send an email out every day. I write them all. It's me writing it. And today I was kind of, you go and read it if you like. It was kind of a bit of I'm glad it resonated with you, mate, because I wrote that from the heart. Mark says, it seems a checklist these days are really difficult to work out as many things are not correlated in the new world of trading. So maybe the historical checklist doesn't work as well. And do you know what, Mark? This checklist, where is it? Still works absolutely fine, because I'll find it for you. This is all timeless. What's happened with the price so far this week? I care. Like, hey, we trapped here, we moved off this headline. What's happened in the overnight session? I care about that. Maybe if you're a different trader, fine. I want to know overnight session today. We dipped and we were kind of opening up the session at the highs. That's important to me. Like, okay, I think we're going to run on. Where are we likely to open? Yeah, or are we gapping? Are we outside the prior range? That's important. What's the likely trading range today? You see, I had that on my chart. I had my $400 range. I thought we might do $400. I got my $200 as well. That's what I'm expecting from the NASDAQ on the 24-hour chart. You adjust that for your thing, and that helps you if you're in a trade, get your targets right, calibrate to conditions a bit, your key levels. We're looking at calendars, what's on the calendar, previous days, what happened yesterday. Was it a wide range day? Was it a trending day? Because if it's a trending day, I'm expecting the trend to day two playbook to come into play, which is the dip and then retest of highs. If it was a narrow range day, I might expect a volatility expansion type day, etc., etc. So yeah, I get your point that some things aren't correlated, etc., etc. However, this stuff is timeless, and it might adjust to how you trade, but you kind of want to calibrate yourself to the conditions you're in, and so that's really worth concentrating on. Okay, uh, hey Mark, nice to be here again. Rowi's back. Hey Rowi, what would you recommend? I was great. I was in a great momentum with my funded account. Everything flew right. I withdrew money, then things got worse. I blew my account, feeling like I was stuck in a cycle, lost momentum after I proved myself I can make money. You know what, Rowie? You can't take that away from you. If you've done well in a period of time, that's your new high watermark. You just do what you did before. Get back to the basics. Get back to simplifying stuff. Low risk, one day at a time. Build it back up. The progress as a trader is not linear as much as we like it to be. It's more of a sine wave, but slanted the upside. So there's going to be times when things are not going your way, but actually the lows are going to be high. You know, that higher low, higher high, and just accept that this is just a mean reversion. And as long as you focus back onto what was working, then you can get back to the highs. And I think that's I glossed over that, but we love to have a linear progression, equity curve doing this, but in reality, it's more like this, especially developing trader. It's more like it's much more choppy. As you get more experience, you kind of have this stagnation, little growth spurts. That's just the way it is sometimes. Um, uh, okay, we're getting there. Sue, good to see you, Sue. Great class, Mark. Love the details about using replays. Can you talk a little bit more about what we're looking at on the twice run on 3x speed before the evaluations, maybe as we dive into this for the first time? Also for traders that use Schwab's platform, I'm not sure about those guys. Oh, sorry, you said there is an on-demand tool. It's super easy. Sorry, I thought you were asking me, Sue. I should have read the whole thing before I jumped the gun. Yeah, great. So you've got other platforms, you're fine. So what I'm looking for when I run through on triple speed, I just want to sit back and like I'm watching a movie, like I'm watching Netflix. I want to see, and for me, I kind of look at how the VWAP changes slope, how the moving average changes slope, how the price responds to these kind of breaks to fresh territory. I'm not looking for anything specific. I'm just letting the market talk to me. This sounds so fluffy and hairy fairy, but that's what I'm doing. I want to run it on 3 speed and just see, hey, you know what? The type of day we had was we tested lows, we pulled back up, we held above VWAP, slow afternoon grind. Maybe there's nothing to that, but I just want to see the whole thing quickly. So that could be kind of North Star for you, just watching it without any objective and just trying to seeing the day through a different lens. That's probably the best way of looking at it. So it's like, I want to see the day through a different lens rather than right in the heat of the moment, the thick of the moment, trying to make trades. Let's just see it all go through. Okay, interesting. Interesting. Right, where do I want to focus now and do it on the lower speed stuff? Hopefully that's helped. Beth, thanks for a great webinar, Mark. Thank you, Beth. This specific topic adds a lot of value to my daily trading. Good, I'm glad. It helps me see the bigger picture, such as which levels to trade and which strategies to apply, rather than just watching candle movements and chasing the next trade. Good for you, Beth, and that's exactly the objective. It's we can get so bogged down into the individual candle movements, and I get it, right? We're traders, and that can just suck us in, but it's just pulling yourself back and looking at the higher time frame and the bigger picture. Stuff. Okay, feeling like the condition changed, the strategy changed. I went on tilt. That's Rowie answering why he didn't do so well. You can sort that, Rowie. Robin says, "What's the best way to stay emotionally neutral as the trade sizes increases? As the trade size increases, even when you've pre-modeled the math and know your edge works." Robin, sizing is a complete topic on its own. Here's something to do with sizing: is you do it incrementally and slowly, hopefully doing that. but you say to yourself, I'm going to run this for X number of trades. My risk capital is now X. If I lose every trade, this is my loss. Am I happy with that? Yes. So use your risk block method for sizing, increasing my sizing. I'm not going to look at it or care at it until I've done 10 trades. Am I happy to accept the additional risk increment? Yes, I am. Carry on. And just being kind of looking at the bigger picture of how many trades you're going to do with the size increase as opposed to the next trade. Because absolutely guaranteed, not many things are guaranteed in trading, but this seems to be the one. The day you increase your size is the day you will hit a red day, because that's just the way the market likes to operate. And if you can kind of think a little bit further ahead and say, I'm going to do 10 trades like this, or 10 days like this, sorry, and then I'm going to review. Okay. Reese says, hi, Mark, great webinar as always. Thank you, pal. Within your routine, how much time do you spend reading market news and fundamentals, and what is your go-to resource? X, actually, believe it or not. So I go on X. There's a few guys on there. Walter Bloomberg, I follow. He posts kind of things that are breaking news that I think he just copies and pastes from Bloomberg. Mike Brown, Pepperstone kind of posts some of the main things. So I will just have a look and see what's been said. At the moment, there's so much stuff, you kind of have to filter out what matters and what doesn't. And often I find myself going look at the overnight chart, seeing if there was a spike, and then going through the timeline and just seeing if there's anything that came out there that's relevant to that spike. Fundamentals, I'm not that bothered, mate. You know, at the moment, I know what's driving the market is tariffs. Tariff news is driving the market. I'd say that it's starting to peel off a bit because we're getting so many swings, but it's all put into the same kind of mix, if you like. We've got real heavy geopolitical increase going on in Russia. The Ukraine attack, they took out that's important, I think. How's the market responding to that? Crude oil. We've got the tariff deadline coming in. That's still driving the markets, and so that really, I know I'm looking for the market's engine. The market's engine changes quarter by quarter, year by year. I've seen so many different engines. People were worried about the Greek default crisis. People were worried about the yen. People were worried about gold. People were worried about all sorts of stuff, right? And your job is to calibrate to what traders who have got the money to move stuff about, institutions, funds, are looking at. At the moment, it's the tariff things. So I don't care about much else. All I care about is, hey, is this important? Are traders watching this? And I just skim and I just look and say, I'm not going to try and take an opinion from this. What I will do is I'll say, hey, there's a lot of bad news and the market's gone up. That tells me a lot. ISM's missed. Trump's got angry with China, blah, blah, market's up. Hang on a second, is that a change in narrative? Should I expect a continuation the next day, etc., etc.? So it's just that dancing that fine line. Mehetabel. That's exactly right. I know I've got it the third time. Share titles of the books you read, please. I will give you Best Loser Wins is a great book. Market Wizards books are great. Those two are a must read, in my opinion. Pitbull's a great storybook. Bulletproof Traders, great, from Steve Ward. Don't bother with that. Don't bother with that. I don't know if you can see these. Don't bother with that. There's 3, 4. I know the Market Wizards books have to be read. Best Loser Wins has to be read. And Pitbull is a great storybook. Some people don't like it, but I loved it. I absolutely loved that book. So there's some for you, pal. Okay, we're nearly at the end of the questions, I think. There's a few more here. Sandeep says, yes, good value, thank you. Victor, focusing on what is moving the needle is my takeaway. Yes, good takeaway, Victor. Thank you, Mark. You're very welcome. Yeah, focusing on what is moving the needle for you, because it's all different for all of us and it was different for you at different times in your trading journey. Alex says, what would you recommend to a trader who has a proven system, solid stats, strong discipline, but sometimes hesitates to pull the trigger, especially after a few losses? Visualization, Alex. Visualize yourself in the situation where you see the trade, you feel the urge to not pull the trigger. I just want to check this, I don't want to do that, and pull the trigger. Rehearse that in your mind. Today we're talking about reps, right? The reps of replaying and stuff. Visualization is a great way to get those reps, especially for a mental challenge like that. If you can run through it in your mind and rehearse it, that's great. Brownie points. You take your mouse, disconnect it, you sit there in a chair and you feel the mouse in your hand. You imagine yourself bringing up the ticket, whatever you do. Imagine yourself, oh, no, I just want to hesitate. And you go, no, I feel the hesitation. I'm clicking anyway. And actually click the mouse, get the actual physical action. You do that enough times, it starts to hardwire your brain. So in the heat of the moment, you slowly start to, not hesitate. It's not going to be instant, but you slowly start to turn the ship around. Robin says, how do you manage cognitive fatigue or subtle burnout from constant decision making, even when you love the work and trust your system? That's a great question, Robin. It affects us all. I think it's just being very self-aware again. As traders, that's our superpower is self-awareness. You're emotionally feeling a little bit frustrated, you feel a bit rushed. And same with this. Like if you feel yourself losing momentum, losing this, just take a break, man. The markets will be here. No one ever, ever, ever regretted taking a break from the markets. Even if it's a day, 2 days, a week, do what you need to do. And if you've got a genuine spark for it, it'll come back. And it's just a little bit of overload. I take breaks all the time, man. I'm like, you know what? I'm just not going to trade the rest of the week, or I'm not. And sometimes I might be like, you know what? There's an opportunity there, but I know that actually the next week I'll be much more on point. And it's being self-aware. It's being self-aware. How much effort you can put in during the trading day. Not many of us can sit in front of the trading screens all day long and still have the same output. Some people can. That's great. I know I can't anymore. I can't sit here and have the same level of intense focus. So I will dial that into the open. I'll dial that into this and that. I know that very rarely in the evening, I'm a UK, the evening US session, do I want to place a trade? I have a strict rules as to what I kind of look for in the day type, because I feel like I've got a big enough edge to overcome that little bit of fatigue. But it's the self-awareness, it's the self-awareness and taking a break. Okay. Got to go. Cheers, Tim. Thanks for tonight. See you again, pal. Felabala Alana says, I guess that's your first name. I like the screen replay, but since I work full time, 1 minute entries are almost impossible. I'm going to copy how you review the 1 minute over the whole day, review the 5 minute over the whole week to kind of ratchet. Yeah, perfect, mate. Perfect. Do that. Do the 5 minute, 15 minute, do a longer time frame. That works just as well. And maybe I should have mentioned that. Emmanuel says, thank you so much. Thanks, Mark. Thank you, Nuno. Rowie says, thank you. He'll prove he can. David says, Mark, final question. April, May, price action. Was it objectively bad or just my poor performance? It was unusual, pal. It was unusual, wasn't it? It was a different environment. And the thing is, I think, is that if you haven't experienced this extreme volatility, then you've just learned something. It's not a normal condition. We had loads of stuff that was all over the place. Some traders killed it. Some traders struggled. I don't worry about it. If you don't know how much experience you've got, but it was just very, very different to what we're used to. And so unless you've seen this stuff before, you can't expect to have done amazingly well. Now, if you go through different market environments, like you've been through that kind of the credit crunch and all this type of stuff, there's certain similarities through that you can take and leverage on. But you're better off being a specialist in the normal conditions, if that makes sense, than being abnormal, because normal conditions are there more often. So if you can be good at kind of spotting trades that show themselves more often and more frequently over the year, that's going to serve you better. Okay. Just two more questions. Daily Trading Coach by Dr. Steenbarger. Yes, George, that's a great book recommendation too. Or like a TikTok or trading podcast or something to over trading. What's this question? Is the second question from this? Is it possible to make consistent living from trading possible, like funding accounts, personal accounts, or is it a cycle of feast and famine? The reason I ask is considering making a signals group supplement my income since funded again, but I'm selective looking for A+ setups. I trade a couple of times a week. Alana, a lot of trading, if you look at a lot of trading growth, the 80-20 rule applies. So very often you'll have excellent months and you'll have months that don't do anything. You'll have excellent years and maybe years that don't do much. And you see this throughout trader track records. You see this through hedge funds. You'll see this through your own trading. And so it becomes very difficult to say, hey, I need this per month. I need to do this, this, and this. That's a very difficult position to be in. Not impossible, but good traders even have this. You have the spike. You have good stuff. then maybe it goes quiet, maybe not on point, maybe some things happen. So it's not necessarily the linear progression that you want, which is why it makes it challenging to do it from that perspective. If you can smooth it out, if you have cash and you can operate with cash and then the trading comes in to top up that cash, that kind of frames things differently. If you have a secondary way to make some cash, you've got a job, you've got stuff, and it fits around your trading, perfect. And if you've got, what, Alana, there's other stuff out there you can do. If you've got a skill, then you can leverage on it. Right. I think that's it, ladies and gents. Thank you so much. Appreciate your time. As always, we've had a good session today. We shall be back again next week. It's been a pleasure as always. Take care, guys. Keep the risk managed. I shall see you next time. Bye-bye.